Ever pondered what the hype surrounding cryptocurrency is all about? Let's dive into the fascinating world of cryptocurrency, a domain where fiscal dealings merge with state-of-the-art technology in an innovative dance that's revolutionizing how we perceive money. Cryptocurrency, fundamentally, is a digital or virtual model of currency. It functions autonomously from any central bank, leaning on cryptography for security. This ensures its exceptional security while also making it resistant to government intrusion or manipulation. The notion of cryptocurrency remained relatively obscure until Bitcoin's introduction in 2009. Since its advent, it has swept the globe by storm, gaining increasingly widespread acceptance and acknowledgement. Presently, we have countless cryptocurrencies, each boasting their unique attributes and applications. Bitcoin, the pioneer of all cryptocurrencies, was the first to present the idea of a decentralized digital currency. It continues to be the most popular and broadly accepted cryptocurrency, famed for its limited supply of 21 million coins. Then there's Ethereum, a platform that surmounts mere currency. It acquainted the world with smart contracts and decentralized applications, revealing a plethora of prospects for employing blockchain technology. Don't overlook Litecoin, commonly regarded as the silver counterpart to Bitcoin's gold. It proposes faster transaction confirmation times and a distinct hashing algorithm, making it a desirable choice for some users. These represent just a handful of the myriad cryptocurrencies available, each with their unique selling propositions. They've ignited a financial revolution, enabling peer-to-peer transactions, diminishing the necessity for intermediaries, and offering an unprecedented level of privacy in conventional banking. Cryptocurrencies are undeniably captivating, not merely for their technological advancement but also for the prospects they offer for traders and investors. They've unveiled a new realm of trading opportunities, presenting extraordinary volatility and potential for significant returns. Ready to learn how to trade with them? Trading with cryptocurrency might seem complex, but it's not as daunting as it may appear. Diving into the world of digital currencies can be as simple as buying your first cup of coffee. But instead of a barista, you have cryptocurrency exchanges. These are digital platforms where you can buy, sell, or exchange cryptocurrencies for other digital currency or traditional currency like US dollars or euro. Think of them as the bustling stock markets of the digital world. When you trade with cryptocurrencies, you're essentially buying and selling digital assets. Let's say you decide to purchase some Bitcoin. You'd go to a cryptocurrency exchange, place an order, pay with your traditional currency or another cryptocurrency, and voila! You're now the proud owner of some Bitcoin. One thing to note is that the value of cryptocurrencies is highly volatile. This means the value can increase or decrease significantly in a very short time, making it possible both for high gains and high losses. However, this volatility also paves the way for potentially high returns. Another unique aspect of trading with cryptocurrency is the ability to trade around the clock. Unlike traditional stock markets, which operate during set hours, the cryptocurrency market never sleeps. It's open 24 hours a day, 7 days a week. This means you can trade whenever you want, wherever you are, whether it's in the wee hours of the morning or during your lunch break. Moreover, because cryptocurrencies are decentralized, they're not tied to any particular country or government. This means they can be traded globally without the need for foreign exchange. This global accessibility opens up opportunities for everyone, no matter where they're located. In summary, trading with cryptocurrency offers a unique set of benefits. The potential for high returns, the ability to trade at any time, and global accessibility are just a few of the advantages that make it an exciting alternative to traditional trading. As we've seen, trading with cryptocurrency has its unique advantages, but how does it compare with trading with fiat currency? While cryptocurrency has its unique perks, fiat currency trading has been the traditional method for a long time. So what exactly is fiat currency? In simple terms, it's the legal tender issued by a government which is not backed by a physical commodity like gold or silver. Instead, the value of fiat money is derived from the trust and confidence people have in the government that issues it. The US dollar, euro, British pound, and Japanese yen are all examples of fiat currency. Now let's look at how trading with fiat currency works. The most common method of trading with fiat currency is through the foreign exchange market, or Forex for short. This is a decentralized global marketplace where all the world's currencies trade. It's the largest and most liquid market in the world, with trillions of dollars in transactions happening every day. Another popular method is stock trading, where investors buy and sell shares of public companies. These trades are typically conducted through stock exchanges like the New York Stock Exchange or the Nasdaq. What are the benefits of trading with fiat currency? Well, one major advantage is stability. While cryptocurrencies can be extremely volatile, traditional fiat currencies tend to be much more stable. This is because they're regulated by central banks, which implement monetary policies to prevent extreme fluctuations in value. Another significant benefit of fiat currency is government backing. If you hold a US dollar, for example, you have the assurance that the US government stands behind that money. This provides a level of security and trust that simply doesn't exist with cryptocurrencies. Finally, trading with fiat currency is far more straightforward and accessible. There's no need to understand blockchain technology or deal with digital wallets. All you need is a bank account and a brokerage account, and you're good to go. It's clear that both cryptocurrency and fiat currency have their own strengths and weaknesses. Now let's compare the two. When it comes to trading, it's important to understand the differences between cryptocurrency and fiat currency. First, let's look at the similarities. Both types of trading involve exchange of value, require a platform for trading, and of course, carry the potential for profit or loss. They also share the fundamental principles of economics such as supply and demand. Now let's delve into the differences. Fiat currency trading, often referred to as forex trading, revolves around the exchange of government-issued currencies. It's a mature market, regulated by financial authorities worldwide. The main factors that influence the value of fiat currencies include economic indicators, geopolitical events, and central bank policies. On the other hand, cryptocurrency trading is a relatively new arena. It involves digital or virtual currencies that use cryptography for security. The value of cryptocurrencies is mainly driven by technological updates, market sentiment, and regulatory news. Unlike fiat currency trading, the crypto market operates 24 hours a day, 7 days a week, offering a higher level of volatility and potential for greater returns. When it comes to risks, fiat currency trading is susceptible to inflation and geopolitical risks. Cryptocurrency trading, however, is subject to market volatility, regulatory changes, and technological vulnerabilities. It's worth noting that while the crypto market's volatility can lead to high returns, it can also result in significant losses. As for the rewards, fiat currency trading offers stable and predictable returns, while cryptocurrency trading can yield exponential profits due to its volatile nature. So what should you consider when choosing between the two? Well, your choice should be guided by your risk tolerance, investment goals, and understanding of each market. If you prefer a regulated environment with lower risk, fiat currency trading might be your best bet. But if you're willing to embrace higher risk for potentially higher returns and are fascinated by the world of digital assets, cryptocurrency trading might be the way to go. As you can see, choosing between cryptocurrency and fiat currency trading depends on various factors. So what have we learned about cryptocurrency and fiat currency trading? We've journeyed through the intriguing world of cryptocurrency, a digital or virtual currency that employs cryptography for security. Cryptocurrency is decentralized and operates on a technology called blockchain, which is a distributed ledger enforced by a network of computers known as nodes. This makes it immune to government interference or manipulation. In contrast, we discussed fiat currency, the traditional medium of exchange, whose value is backed by the trust and confidence of the people who use it. Fiat currency is issued by the government and is not based on a physical commodity like gold or silver, but rather the faith and credit of the economy. We've delved into the benefits and drawbacks of trading with each. Cryptocurrency trading can offer high liquidity, 24/7 market availability, and potential for significant profit. However, it also comes with a fair share of risks, including price volatility, regulatory issues, and security vulnerabilities. On the flip side, fiat currency trading or forex trading is the most liquid market in the world, and it offers a wide range of trading possibilities. But it's not without its challenges. Trading with fiat currency can be complex, with factors such as inflation rates, political instability, and economic performance influencing the value of the currency. We've talked about the factors to consider when choosing between the two. Your decision to trade with cryptocurrency or fiat currency should be based on your risk tolerance, market understanding, and trading goals. In the dynamic world of trading, it's crucial to stay informed and make educated decisions. Whether you're drawn to the innovative allure of cryptocurrency or the traditional stability of fiat currency, it's essential to approach trading with a clear strategy and a keen understanding of the risks involved. Whether you choose to trade with cryptocurrency or fiat currency, remember that both have their own unique advantages and challenges. Happy trading!